He will see in Bakersfield, San Jose. We'll see in Buffalo, Toledo, Montreal, Toronto, Ottawa. Go to jimmydore.com for a link for those tickets. And if the world shifts and starts to use Bitcoin, that will tank the United States economy, right?
Now you're really talking about an interesting topic here. What happens to the global economy when we go on a global Bitcoin standard? To understand this, think of it in this way first. What if the world suddenly went on a gold standard? So you would understand immediately that countries with the most gold are in a better position than countries with no gold. Countries with no gold would have to be buying gold from the countries with gold, and it would have a dramatic impact. Same thing happened after World War II. There was a global reordering of the economy. You had the Bretton Woods Agreement. It's decided that gold would back the world economy in the form of backing the U.S. dollar. And the U.S. dollar would be the world reserve currency. And that's what we had since World War II. Then in 1971, Richard Nixon closed the gold window. We went on an all-fiat world. So all currency referenced other currency. So there was nothing backing the dollar. The dollar's not backed by gold or anything. All the world currencies are backed by each other. And that's fine if they all are colluding. And all the central banks collude, and they all get rich themselves, and they cause a lot of inflation, and it's really a bad policy. Then along comes Bitcoin in 2009. And as Christine Lagarde called it, it's an escape hatch. It means that you can go to a virtual gold standard, except this time you can own it yourself. It's unconfiscatable, it's uncensorable, and it's absolutely scarce. So it's better than gold in many ways. And this is why it's now worth almost $2 trillion, is that the world's population is realizing the shortcomings of fiat money and gold, and they're seceding from the global economy, and they're joining the Bitcoin economy. So Bitcoin economy and the global economy is an emergent parallel global economy that's challenging the old world order with a Bitcoin standard. And to your point, yes, it would mean the dollar would no longer be world reserve currency, and the dollar would go the same way as the British pound and all the other currencies that were the world reserve currency going back 300 years. For a period of time before they gave way to something better. And Bitcoin is better. So in my view, the US dollar is on its last legs. It will no longer be the world reserve currency. The value of the Bitcoin, the dollar inflation in the United States will continue to rise. There'll be no curtailing of that inflation. And people will go to Bitcoin. We already see now in this realization hitting a lot of people. That's why the price of gold just hit a new all-time high of 3,100. Right? It was trading at around 15, 16, 1700 for years. Now it's at 3,100, and gold is looking to go to 4, 5, 6,000 because people are getting rid of the paper money because there's no cure for the debt that is plaguing the globe. The planet Earth, it has the highest debt to GDP ratio ever in history. I believe it's over 300%, which is absolutely enormous. And so people are really frightened that this debt spiral will completely collapse the value of their paper money. So they're moving into gold and they're moving into Bitcoin. And if you're moving into gold to escape the ravages of fiat money inflation, you should buy Bitcoin instead, because as Paul Tudor Jones, very famous hedge fund manager, has said, Bitcoin is the fastest horse in the race. Bitcoin is the best hedge against inflation. For every dollar that gold goes up, Bitcoin will go up $20 in value. So it's really the place to be if you want to escape now the end game of the experiment of central banks that began 300 years ago with the Bank of England. That's now collapsing. It's over. It didn't work. Economies couldn't handle it. The governments couldn't stop printing too much money to pay for too many bad programs, and now it's collapsing, and it's causing incredible chaos all over the world. But that's what happens when you transition to a whole new paradigm.
So I put some of my retirement, right? So I'm always thinking about where I put my retirement money, and I'm afraid to put it in the stock market, even though the last 2 years has been great for the stock market. But that's all kind of that's all smoke and mirrors in a sense, right? I mean, if you cash out right away, it's good, but like I know that Warren Buffett he's taken a lot of his money out of the stocks. Which seems to me he's predicting a crash. And what do you see? Do you see a crash of the stock market because it seems to be all inflated values? No?
Well, first of all, I must put out this disclaimer. I do not give financial advice. I'm not a financial advisor, and do not take what I'm saying as financial advice. Okay, I have to put that out there so people understand that this is not to be construed as financial advice. Yes, advice. Yes, it's true. Warren Buffett is raising cash. He's got over $300 billion in cash. It's his largest cash position, really, in memory. He has the Buffett rule, which is that any time the stock market gets more than 100% in value relative to the GDP of the United States, stocks are overvalued. Well, stock market recently went to 2 times GDP valuation. So it went 2 times the Buffett rule. So just following his own discipline, he's lightening up on stocks and going into cash. The only thing the stock market's good for is for somebody like a Michael Saylor. I don't know if you know the name Michael Saylor, but he runs a company called MicroStrategy, now called Strategy. And what they figured out is that in order to keep the stock market bubbly, the central bank took rates way low. As a matter of fact, they went basically to zero.
Interest rates, you mean?
Interest rates, yes. Yeah. And so what Michael Saylor did starting in 2020 was he had 100 million or so on the balance sheet of cash. And he figured out that even if he was getting 3 or 4 or 5% of interest rate at the bank, inflation was higher, and he's got a negative return at the end of the year. So he's put all of his money into Bitcoin when it was approximately $10,000 per Bitcoin. And what he's been doing is, and the market capitalization of his entire company was roughly under $2 billion. And what Michael Saylor came up with an ingenious plan, because he's been selling his own stock into the market and selling his own debt into the market, which normally, if you're into economics or finance, you would say, well, that's dilutive and it'll make the stock price go down. But he's been using 100% of the proceeds to buy Bitcoin. So it's actually not dilutive, it's accretive. So now his company's worth almost $100 billion. And he's been buying Bitcoin. He now owns over 500,000 Bitcoin. They are going to try to buy 1 million Bitcoin. And so he's using the stock market to attack the stock market, if you will. It's called a speculative attack. We saw the same thing in the early 90s when George Soros broke the Bank of England. He borrowed money from the bank to destroy the bank, and he made $1 billion. So now Michael Saylor has taken that lesson on and made it 100 times bigger. He's using the stock market effectively to kill the stock market. Because if everyone and every day companies are announcing, we're doing the Saylor plan, which means that, like a GameStop just announced a few days ago that they had $5 billion on their balance sheet doing nothing. They're going to now start buying Bitcoin. There's a company in Japan called Metaplanet that's been doing this now for over a year. They're the best performing stock in Japan. There are companies in South America now doing this, the Saylor plan. They are using the tools of capitalism to kill capitalism, exactly as Marx predicted, right? So they are simply using the cheap money available in this incredibly overinflated, indebted world of finance to borrow cheap to buy Bitcoin. And the average rate of Bitcoin appreciation over the past 5 or 6 years is, 50% a year. So even if you're paying, 6 or 7%, you're making an incredible spread on the arbitrage. And of course, they're borrowing at a lot less than that. They're borrowing close to 0%. So that's the only good use of the stock market right now, are corporations using the market to fund their Bitcoin purchases. And we're seeing that happen in MicroStrategy stock. It's a very interesting stock. I would encourage your viewers who are stock traders to look at it more closely. I think you'll find it a very interesting story. And once again, this is not financial advice.
So I don't need to pay, as a regular person like me, I don't have to pay attention to stablecoin.
No.
Okay.
No, you should just be buying Bitcoin. Again, if you have your retirement account and you want to outrun inflation, right? So inflation is something that is eating up your return. You want to outrun your inflation. Well, the stock market typically returns something like 7% a year. That's the average annual rate of return in the stock market. And inflation is really running a lot higher than 7%. The reported inflation is cherry picking numbers to make it a lot lower than it actually is. If you were to calculate inflation based on stuff that people actually buy, like healthcare and education and housing, the actual inflation rate is closer to 15%. So you have to make 15% a year in the stock market just to break even, which most people don't do that. Warren Buffett's annual rate of return is roughly 22, 23%. That's really the only thing Warren has delivered over the past 30 years of his career, which incidentally doesn't really beat the market by much at all. So there's the stock market's not really going to get you there. The bond market, well, we're at the end of a bond bull market that started in 1980 under Reagan, and it ran from 1980 to 2022. And the bond market rally that started in 1980 ended in 2022 when the Russia-Ukraine conflict kicked off. So the bond market's now entered into a bear market. It's in a protracted cyclical bear market. So the bond market's definitely not the place you want to be. So then there's gold. Well, gold's been acting great because it's an inflation hedge and it's going to keep up with inflation. If you want to maintain parity with inflation in retirement, gold will get you to that place where you're not getting eaten to death in your retirement by rising inflation, but it won't do better than inflation. Enter Bitcoin. Bitcoin will actually outpace inflation and outpace gold substantially. So you can actually increase your net worth even in retirement if you're not working, if your expenses are capped and not extravagant, and you're just letting Bitcoin compound at its very high rate of return as the world pours all of the available resources into Bitcoin. So Bitcoin should trade at parity to gold in terms of market capitalization, which means that it could easily go from 85,000 a coin to 850,000 a coin during this cycle. So say the next 5 years. So you got 1,000% return in 5 years, I think is a reasonable expectation for Bitcoin as it achieves parity in market capitalization with gold, which it definitely should because it does everything gold does, but it does it better.
Okay. All right. Well, I feel that makes me feel a little better about my gold purchase for my retirement. So I feel, because that's all I was looking. I didn't want to wake up like people did in 2008 and find out that their 401k was wiped out. And then they had to keep working until the market came back. And so I'm like, you know what? I don't need to get rich off my retirement. I just want to make sure it was there when I wanted it and I didn't lose money. And so you're saying that gold does that, but Bitcoin does it way better.
Yeah, it does it way better. Gold is not going to hurt you.
Yeah, gold's not going to hurt you. Okay.
It's been reliable for 5,000 years, and it has recently broken out of a kind of a sideways move. It's very interesting to study the gold market, Jimmy, because the gold price gets suppressed. It hasn't been allowed to really have price discovery, free price discovery for years, and the same thing in the silver market, because it does the Wall Street brokers and bankers don't want gold to do well because it's competition for them. And so they use derivatives to suppress the price of gold and silver. And the way that they do that is every time somebody shows up in the futures market to buy, let's say, $100,000 worth of gold futures contracts, Wall Street will counterfeit and sell $1 million worth of gold futures contract at the market to crash the price. So counterfeiting futures contracts is another counterfeiting scheme. It's called naked short selling. It's technically illegal, but it's widespread. It's one of those things where there's a law in the book, but the law is not enforced. So naked short selling is illegal, but it's done quite regularly. And this has been the way to keep the price of gold and silver down for years. But what's happened is people are so afraid of the inflation genie having come out of the bottle now that they're going to the futures exchange and they're demanding physical delivery. So you can't play that game. You can't sell naked shorts and have the same impact. So the price of gold has been unleashed. It's now finding its true price discovery. So the gold, 3,000, 4,000, 5,000, that's what we're going to see in this cycle. But with Bitcoin, you have, it's built on what are called private keys, and those private keys are held privately. And they're not as subject to manipulation in the futures markets as you would find in the gold market. It's truly decentralized. So you don't have the same risks and problems that you do in the precious metal markets. You do see some of it because volatility equals profit on Wall Street. So if you can create profitability, if you're in Wall Street, you can create a lot of profits. When I was in Hollywood in 1996, I invented a technology called the virtual specialist technology. It's a US patent number 5950176. So you're creating artificial volatility in virtual securities, and we had a virtual currency at that time called the Hollywood dollar. That technology, incidentally, was sold to Cantor Fitzgerald in 2001. And they used it to create artificial volatility in the derivatives market to create profitable trades for them. right? So creating artificial volatility is extremely profitable. And I invented a technology to do that in 1996. And it's still used today. And all the variations on that technology to take trends and to exaggerate them in ways that where you, the market maker, can make 10, 20 times the profit of somebody who's just buying and selling, who's not using this technology. And so this is interesting to see the circle come all the way back, because now Howard Lutnick is a big Bitcoin supporter. He's the Treasury, he's the Commerce Secretary in Washington. And I talked to him, I saw him a few months ago, and we chatted about this, how everything seems to be connected.
We will see in Bakersfield, San Jose. We'll see in Buffalo, Toledo, Montreal, Toronto, Ottawa. Go to jimmydore.com for a link for those tickets.